Definitely want to apologize for last week. I realized most importantly, my last two shows, my lighting actually been a little bit dim in the office. So I definitely apologize. Hopefully today I fixed that problem. As you know, I started working on a stripping it down after starting on February 1st of 2023 all the way through until the end of July. That current stock watch list, if you go back and you watch the end of July from anywhere between February 1st, and you go look at my stock watch list, I decided to strip it all down and start over. And you may say, how come I decided to strip it all down and start over? Especially with what activity has taken place in the market where there has been a pullback. Now we know that we was going into the third quarter, the end of the second quarter earnings going into currently we're in the third, excuse me, got the hiccups all of a sudden. Currently, we're in the third quarter, and we saw this gigantic pullback. A lot of the stocks that was on the watch list hit their mark, and some of them reverted back. So there's some on the watch list that we had. But I wanted to start over. I wanted to practice my craft, continually understanding that it's always a process. This is a marathon. Not getting caught. Now, there's enough stocks on my past watch list that I do have still listed up online that is enough activity in that to still make a lot of money for me. But at this time, I wanted to do something different. I talked about looking into EVs and then looking. So we talk about energy efficient companies going green. Are there any opportunities based on the money that I have set aside? And then number two, is there an opportunity for me to find, other than the EV cars, any pharmaceutical companies? Well, today on the show, I'm going to directly dive into the reality of some of the issuers of battery and electric vehicles, um, those companies, and whether or not do they have stock or they don't. But some of them that kind of grabbed my attention, even though I did have one of these companies, which is Lucius Group Inc., on my watch list before. The price since the pullback and the Fed raising rates and earnings coming out, we see this pullback. It falls right back into it. Now, one of the things I would always put as a disclaimer: anything that I'm going to talk about on the show, just understand it for entertainment purposes only. This is my personal watch list, so these may be positions I do or do not take. And with that being said, it allows you to realize that if you are not proficient in actually stock picking, having a proper worldview and understanding what you're actually looking at as far as the economy, because you can't really pick stocks unless you have a proper worldview. For me, since I'm young, most of the stock picking that I actually do for my personal portfolio is all based on growth. It's not going to be a blue chip company that is already mature where growth is going to be minimum, since all the staff and all the owners at this particular point have made a lot of money. Now they're trying to maintain, and the percentage growth is a little bit less than I'll find with a company that's in tremendously growth. I mean, you think back in the day, for most of us, when Tesla first came out, Tesla stock was not trading at the prices that it is trading at now. And if you go back post COVID with the Tesla price and then the reopening after that, we've seen Tesla hit highs that it has never had before. But it's a growth company. With everything going on, it's still within that 10-year gap. I mean, they're still, since they've been going public. Another one which I would tell you that's issuer, like I said about Lucid Motor, is Tesla's too expensive. I mean, I could sit here and come up with many reasons of, even though they did a split, they did a double, it's still economically expensive, based on the money that I have available and able to, in order for me to be able to deploy any resources in the first place. I just missed the opportunity. I think sometimes in life we still chase things that we shouldn't chase. We just have to accept that when we enter the game, there are companies that are available to us that will allow us to be able to take positions. We don't have to fight it. I mean, we really don't. Um, and I share that because if we're not careful, what'll end up happening is that you'll chase a stock into the ground, which means you run out of money before they run out of money. So here it is. Here's a couple companies. I haven't put any on the watch list yet, but I want to give you guys an opportunity to understand my way of thinking. Now, my way of thinking may not gel with your way of processing information, so I understand that. But I just want you guys to get an understanding. I put my top 5 EV stocks to invest in, rather not where they're at, and I just wanted to know whether or not are they good. And I'm doing the research on them now. So I haven't put anything on the list if you want to know what companies are, but I could tell you Lucid Motor is on the list. It was on my previous list, but because I'm looking at EVs, I actually did add it over. Plus, the price capitulated down. Um, in since earnings, the price came down. So it's right around, if I'm not mistaken, right now. Let me just quickly do something here, and I'll tell you that something that's very, at least for me, When I'm looking at anything, I'm looking at what are some of the stocks that I can pretty much look at and kind of see as far as EV stocks. And here's my other criteria: they have to be on a Nasdaq or the New York Stock Exchange. I'm not looking at OTC market right now, even though there is Panasonic Holdings on the OTC market. They're in the EV, but I'm not interested because they don't have to disclose that much information. There's a lot of risk that I'm taking on, and the risk means I don't get information in a timely fashion. They have no obligation to provide any additional information, and it's very limited. At least the Nasdaq, which is a little bit more of a, it's it's newer than in New York, but at the same time, it requires at least the dissemination of information on a quarterly basis. Where once I start messing around the OTC market, I could just tell you this: early on in my career, messing around with pink sheets or OTC markets made sense for me. I mean, there's some companies today that are publicly traded on the New York Stock Exchange and Nasdaq that still have stocks on the pink sheets. Yet, for me, I think it's important. Or OTC market as well. They carry on more than one exchange. Right now, I'm looking at capital preservation. I'm not interested in putting myself in any form where I have no way to get the information or enough information, even from talking to competitors, where I would end up losing in the long run. I want to keep my capital. I want to be capital persevere. I like to be, capital conscious and actually make sure that whatever decision I do when I allocate my funds, that it is spent in a way that I can get the information and able to move on to another stock, even if that means I have to take some capitulation or draw down risk, which means I bought at 10 and I'm selling at 8. I'm losing $2 a share on 100 shares. That's $200 that I would lose. But that's calculated, which meant that I took that loss on purpose. I didn't take it by accident. It was on purpose. I decided that there was a better stock that I could buy that I can move my money into that can generate the most. So here's a couple right now that I am looking at. And because I know a lot of you guys will ask, well, so one of them say, well, what do you think about Neo? Well, I put Neo on the list. Neo is an EV, and it's like Lucid. They actually Neo. At the time that I was looking at it early in the year, it was actually trading around $7, $8. Now it's around $13, unless something's changed. I'll do a quick look real quick. I believe Neo, and today I did not go into the market. I did my research. It's at $13.47 to let you know about Neo right now. At the same time, we also have SIL, Standard Lithium Limits. Now that one's a little bit more expensive for the SIL. So when you think about that, let me just tell you what that price is trading at right now since I started doing my research. Just to kind of give you an example, that's $25.75. That means I need to deploy no matter what. It is an ETF, and people have asked me this question: would I invest in ETF? Normally, I don't. ETF you can't own equity stake in. Uh, but as I'm doing my idea generation, one of the things about ETF is that what you can learn, it's like a supersized, it's like a on mutual fund on steroids. To be honest with you, and that's my opinion. That may not be what is classified. Just want you to know that's my opinion. It's a mutual fund on steroids, but you can't own any equity stake in that. But it's interesting because some of the stocks that's held in the ETF are actually stocks that's publicly traded, and that's what got my attention because SIL, which is a Global X Silver Miner ETF, does have EV stocks or materials that go into EV stocks. So when they holding certain companies in their portfolio, I kind of went after that one, not necessarily to buy the ETF, but to be able to do a little research on what they're holding when it comes to materials that go into EV vehicles or solar or anything that's green. Just to kind of give you an example there. One of the other ones that I'll mention today, as I'm doing my idea generation for this, is going to be SIL, which is solar power. As you know, this is another one of those that Elon Musk had a stake in, solar power. So I just want to look at that as well, and then kind of give you some ideas. And that's trading right now at $2.66. Solar Power Inc. Actually, let me stand corrected. Um, that's not one that Elon Musk invested in. So no one has to correct me in the comment section. That's not one he started. He does have a solar company to put solar panels on, but it's not solid. It's not Solid Power Inc. though. That's not its name. This is called Solid SLDP. All right, and then the last one that I'm actually looking at, and I'll put the information, in the body of it as well. So for you guys later, before you know it, is that one is actually Lucid LCID, and that's the last one. These are the ones I looked at right now. I still have not found, as I'm doing my due diligence on, and that's trading at $7.09 right now currently. The low today was $6.78. it's still right in that strike. Now, keep in mind that Lucid did come from a a SPAC deal. So it was originally raised as a SPAC. They found out and they was able to acquire Lucid as their product. So Lucid is one of those ones that I would actually, if I'm putting it in my category, I'll look at Neo before I look at, which is ADR, because it's a company that is out of China. It is a company out of China, and it is traded on the exchange as ADR. That's a lot better than me, in my opinion, and others have their own. But in my opinion, that's a lot better than the ETF, Neo, and it's a lot better than Lucid, a SPAC deal. So if I'm ranking them in categories, I'm looking at NIO, I'm looking at second, I'm gonna look at Lucid before I actually go into and think about any ETF. The goal of me looking at the ETF is because it had EVs in it. I want to do my due diligence, look at the Security Exchange Commission page, and kind of realize what type of raw materials or precious um, any type of things that go into an EV that would fit well. So these are the three stocks right now that I'm actually, doing my research on. I'll give you guys a harder update, but I wanted to come out today because I know last week I told you I'm going to change it. This week I wanted to come out and tell you. So I'm looking at SLDP. I'm looking at SLI. Now that's Solid Power Inc. That's $2.66. I'm looking at Neo Inc., which is NIO. It's an ADR. Uh, I'm looking at Standard Lithium Limited, which is SIL, and Lucid, LCID. These are the four right now that makes sense. The one that is a little bit more expensive, the Standard Lithium Limited, SLI, is around, like I said, at $25.75. That's $2,575 in order for me to even take a position in that. But it's interesting overall because you got to have the proper idea generation. And here's what I'm looking at. I realize most importantly, the government is going to continue to throw money into the EV model, which is regulated. And the reason that's regulated because in overall, it can't sustain itself. So without stimulus money, and since they pouring money into stimulus, do I have any exposure to anything that's in the stimulus category at this particular point? The answer is no. But when you think about stimulus and you think about the government continually issuing money for future generations to have to pay taxes on. Now, there's a lot of people haven't even been born, but because they continue to deploy this money and they continue to stimulate the economy, they want to go, you know, renewables. And because they're dumping so much money into this area, I'm going to take a little bit of exposure. It allows me to capture some of this cash that they're putting money into. The industry, if it was not being stimulated, it actually wouldn't even exist. I understand that there's a lot of entrepreneurs out here and they're trying to do things. The first EV actually was on the road many years ago. BMW made the first EV vehicle, and they realized very early on after they built the first EV, which if you go back, you watch any of Elon Musk's early videos, he talks about that BMW was the first one that made EVs. But just like IBM was the first one that had computers, and then Apple dominates the computers today, it's because IBM made some big computers, and Apple made something that's usable for the consumer. Well, at the time, BMWs was very, very expensive, but yet Tesla made something that's usable for people. So that's really what it really comes down to. It comes down to, first of all, timing. If BMW would have remade their, they still make EVs now. BMW, as you know, they got the i8, but in general, the i8 is not for a person to, you're talking about a vehicle that's over 130,000 higher, close to $200,000 if it's all decked out. So it's not something for the general public. It's select few that can actually buy that. But BMW is the first one that came out with the EV models. Elon Musk came out with Tesla, but at the same time, he was looking at EV. He did the Steve Jobs way. Steve Jobs looked at IBM, and then from there, he transferred it over to Apple. And then the sky's the history. Steve Jobs is gone, but Apple's still here. We're going to see the same thing when Elon Musk goes. I mean, during our time, he's probably one of the greatest thinkers that utilize old patterns. That's really what he's very good at. Outside of creating things from scratch, he's very, very good at looking at expired patterns. That's his secret. If you really study him, you'll see that everything he takes old patterns, he looks at it, then he asks that question. Well, how come that's important? Even when you're doing idea generation, because you're looking at the EV model that's being stimulated by the United States government and other governments from around the world that cannot exist without money being poured into it, because it's not a resource, at least privately, that makes any sense for any private company to do unless they're being stimulated. They're receiving cash to do it. So there's an incentive to make EVs. So these people are doing EVs for that. And because of that, there's an opportunity to make money in this industry. So you would say, well, okay, I understand now why he's putting EVs. Yes, I just told you. It's because I want exposure to money the government's going to pay. I mean, heck, if my great grandkids going to pay for it, I might as well get paid for them and help them out by leaving some money so they can at least have it, since EVs is something that's being stimulated by the United States government today. I'm constantly looking at what's next the government's going to stimulate, because that kind of tells you where the next inventions are going to come from. So as I picked pharmaceuticals, which is also an area where it's government stimulated. Think about um, the current drugs that's out here to deal with the Savasa virus, or you would say the Chinese Wuhan virus, the what was really created in the lab. When you think about that right now, that was stimulated by government and private industry, but mostly the government. Government itself gave money, and when they gave money, it was deployed over to that area. Now, all of a sudden, you see Johnson and Johnson, you got Moderna, we have got Pfizer. They all came out with these drugs to help for this virus during the COVID breakdown that we saw in 2020, the beginning of 2020, on to today, where they said there's still cases coming up. Well, that was stimulated by the United States government paying these companies to go and make this. So once they take that money away, trust me when I tell you that some of these companies are good regardless if they have or not, because they have other financial money coming in. But I share that so that you get an idea of when you're doing idea generation. Part of me is pointing towards what is being stimulated, because for at least and this is since Biden's in office, we're talking about right now over the course of about 12, almost 14 years, to be honest with you, that there's been a stimulus on EV models or making renewables. You see wind turbines, and now we talk about cars, charging stations. They can't replace coal. There's not enough. There's not enough wind. Now I can tell you there is wind, but as far as man utilizing and harnessing the wind in a way that it makes sense, because Nikola Tesla, that's another thing when you think about going into renewables. He found a way to harbor power in a source where it would actually be free. That may be one of the reasons he's no longer here, but that's a conspiracy theory. So I won't stand on that. I'll just point that out. But the government came in and they took all of his patterns that he had, because some of the patterns that he had, Tesla itself, Elon Musk named Tesla after Nikola Tesla. So he understood that for most of us, even though people will say that most people that are geniuses, they call them crazy, but Nikola Tesla was able to find ways, and he would not play fair. He wouldn't. What I mean by playing fair was he did not allow everyone to make money off of his patterns. So a lot of the secrets, a lot of the things that he was able to accomplish was taken. So we don't ever know how many of his inventions would make our life a lot more easier today, because he's no longer here to share that information. Well, how does that play when you think about a worldview? Because when you start thinking about EVs and you start saying it's being stimulated, and you're saying where's the government going next? Because that's an industry that on its own merit will not be able to stand. We've seen what happened in Texas. So that should be a precursor. How these turbines are freezing up, and then during last year, as a matter of fact, in 2022, how the winter caused a lot of these windmills that they were just breaking, collapsing, and people were out of power. It was during freezing times. Texas saw some of the coldest winters they've seen in years. And this is what's being stimulated. So my worldview is, let me see what is out there, see what companies make sense that I could afford based on the money I have in my savings. And then from there, based on the way I see the world, the way I see government spending money or deploying resources in an area to maintain it, to stimulate it, that's regulated at the same time, because EVs is actually a regulated field. So people say, oh, no, it's not the wild, wild west. This is not like gold mining. This is not a resource that you could just go dig. It's not like Bitcoin. It's not like gold. It's not like silver. It's not like copper. It's not like these precious metals in the earth. This is something that has to be maintained, and it depends heavily on coal. So since one of the things I've always said, energy is always going to be a source that I should. At some point, right now, energy cost is pretty high. Some of those stocks are outside of what I have available in savings that I can buy a lot of at this given time. But as long as I'm going to do EVs, eventually I'm going to have to put some, as I make profits, put power companies into it, because EVs can only be sustained by coal. We can go around the boat. You guys can put in the comments and argue with me if you like. That's fine. But the truth of the matter is, without coal, EVs don't even exist. I mean, we would have to wipe out the United States and put turbines, and we nobody living here. The United States would be nothing but a big wind turbine, and that's just not my opinion. I mean, there's enough reports out there. If you guys do your due diligence, that you will find that it'll be impossible to make the entire automobile industry in the United States be EV completely. It's never going to happen. But since they're stimulating it, that's what's going to be. And these are the stocks that I'm looking at. Won't go, I just wanted you guys to really get an understanding of how we look at um, developing the mindset when you're going to deploy your resources. The stock market itself can be a little bit overwhelming if you're not proficient in it. But overall, just take this into consideration. Here are some hard facts that are appearing today. For every $500, I even do this, for every $600 that you have access to, the market is willing to pay $400 to $500. So that meant if I have 600, I can actually have $1,000 in my broker's account today. I mean, if I have 600, I can have $1,500 in my marketplace. Sometimes when I'm talking, people who may not have the same experience as me, they're thinking in the returns of that's too good to be true. But the reality is, I can tell you that on $600, the market's willing to pay $900. So for every 600 I have, I can get access to $900 immediately. It will show on my broker's account. And that's if as long as I have 600. So if I have 600, I can get 900. That's just the fact. I also seen for every 500, I can get an additional 5, and that means I have $1,000. This is that aspect of the market that most people are unfamiliar with. But that's just remember that our money is used as leverage. I think overall, most of the time we use our money as far as leverage for stuff. We don't really take the position that we're using our money to generate more money. We just use it for more stuff. And I'm also talking from this standpoint that it does not have to put me in a situation where I have to day trade. I can actually take these positions and carry it over 12 months if I have to, carry it over 15 months if I have to, and still be able to defer those taxes out. Now, go seek your own tax accountant. Don't take my advice on this, but as long as I don't close that position, I can carry it over 12 months and reduce the tax implications from being, a total of 20% capital gains down to 10%. So just by carrying it. But I want to encourage everyone today who's out there in the market, who's trying to get the right. Buying stocks is also about how you view your idea generation. What is causing you to say it? Don't buy a stock just because in your mind, like in my mind, I won't buy a stock just because I like the company. No, that's not enough for me to do it. Even if I'm a consumer of that company, it's not enough for me to do it. Because the products I may like, but at the same time, that cost of that stock, when you hear that a stock is trading, for me, PE ratio of 21 times earnings. So for every $1 I deploy today, it'll be 21 years before I be whole. Because that's what it is. So you're talking about 21 times earnings. I'm 45. So do I want to be holding this stock for 21 years? Not necessarily. I'm using it for income. This is a way for me to make more money in a 12-month basis or within 15 months. This is not being viewed as retirement. Retirement to me subjects me to deferring income. I want to make income. Remember, the wealthy mindset, that what you hear from these CEOs of companies, or just take a company in general. A company is going after generating more earnings, and every stockholder finds out it's not doing good. There's normally a capitulation in price. When a stock pays a dividend, they're paying you the money to bring down the price. So if a stock pays $50 and it's paying that dividend, you can expect, or 50 cents, which if you have 100 shares, that's $50. You can expect that stock to go down by 50 cents. So for everybody's out there that's the dividend makers, I make dividend passive income. Just understand, if you're getting paid a dividend and it's 50 cents and you have 100 shares, that's $50. Expected the stock to go down by 50. That's the reason they're paying that. They're paying you for the contraction of the stock. Now, there has to be other factors there for this to continue to increase in value. And that's also another thing with your worldview. Do I think I'm buying a stock at this particular point when I'm looking at these EVs? Am I buying a stock that has upswing and also FOMO in there that's mixed in the inside? Like it's like that secret sugar. You know how kids love sugar, then they crash? Well, FOMO is what we see a lot. I mean, you see a lot of FOMO with Tesla. You see it with cryptocurrency. You see it with Apple. And FOMO is the fear of missing out. So when there's a price down, when you see a little bit of capitulation down $2 or $3, next thing you know, it shoots up by 6. Well, there are stocks in there that when you're in a growth sector, and since we're in EVs, that there's going to be some FOMO. And my thing is, can I make the best decision with the resource that I have to get ahead of the institutions? Because institutions have standards and they have regulations that they got to meet. So you think about a mutual fund company, they have certain standards where they can't buy certain stocks at a certain price. They either got to be, certain companies say they can't buy these stocks or add them to the portfolio unless they're $15. Now they got to wait till it's 15. I don't. So that brings in retirement dollars, 401ks, any type of deferred compensation, and they come in this, what the term is called healing, and they start dumping a lot of that money into this. That also drives up the price. So I'm looking at EV stock that I can get in that's under the price, and this takes time. This is why it's a marathon, not a race. I mean, if you watch any of the recent videos from Warren Buffett talking in his annual meeting, he'll tell you don't need 5 to 6 stocks to be wealthy. You just need 1 or 2. So if I take my time, I can find 1 or 2 stocks, not be overzealous, not be thinking I have to go out and buy a lot of stocks, but just 1 or 2 that I need to make sure that, one, I have the money to buy 100 shares. That's my standard. If I can't buy 100, I'll continue to add money to my broker's account, but I won't buy anything until I can buy 100, because $100 is the key in order for me to be 100% in it. Now, that's just a little thing that I do. I need to be in it 100%. But the reason, most importantly, for that 100 shares is because, if I'll give you an example, I've bought a stock before where I only had 2 shares. And if I had 100 of it and it went up $2, I would have made 200. However, I only had 2 shares. So instead of me going up $200, I went up $2. Same thing if you have 10. Instead of getting $200 for that 100 shares, you get $20. Now, most of you would say, hey, that's cool, that's 20. Well, take your 20 divided by how much you pay, and that's your return. So if if I have 100 and I make 20, that means I made 20% on my trade. That's great. The average right now in the market is not 20% annually. If that's your only trade, congratulations, you beat the market and a lot of the financial planners. If that's not your overall MO, then I would say, if you want to see wealth, it's going to be based on how much money you put set aside, and you start buying in what they call round lots, 100 shares. Block trades are anytime you're buying like 10,000. So you go from buying 100 to buying 10,000 at one time. And when you get to that point where you're buying 10,000 and the stock goes up by 2, you could just take 2 times 10,000 and realize that's a 20,000 swing. If it's 20 cents, that's 2 grand. That's the benefit of having large pools of money, is that small incremental increases between 5 cents to up to $1 is a massive amount of money. Well, when I'm starting, most of you may be starting from scratch. You want to look at being able to start buying 100, then getting to the point where you can buy 1,000 at one time, 2,000, and then block trading. That's buying 10,000 shares, being able to deploy 10,000 shares, that much money to buy 10,000. And a swing is like yearly income for most middle class people or first time jobs. Right out of college, you're making that $20,000 to $30,000. And I've had those days in my lifetime as a person who was overseeing, where I've seen, a $86,000 day. That didn't come because I was buying 100 shares. That was large. That's talking about having 30,000 shares of a stock. But that takes time to build in. The whole goal is to give people the opportunity who may not, because there's so much information on YouTube, but give you the opportunity to hear some of how people think about stocks. So for me, to just finalize I'm looking at one of the leading indicators of EVs, the fact that I want to know where the money is being stimulated by the government, because they continue to write money for EVs or renewable energies. What are these companies, and are they affordable? And because they're being stimulated. And I understand that it's growth, but if it doesn't continue and anyone stops funding EVs, and these companies cannot pull a profit at all, and some of these companies don't buy into some companies that may not be EV sensitive. Most of you may not know, but some of the company I've been looking at right now, not everything, there'll be a EV or there'll be renewable that actually have things that we consider, where they'll tell you that we're talking about saving the planet. You go and look at their portfolio, what these companies hold, they actually have things that destroy the planet. So it's a kind of an oxymoron. That's the reason that I tell you about the ETF that I was looking at, because the ETF has EVs, but it also have things that people, if depending upon your philosophy, if you're thinking about saving the world, it's got some things in it that destroy it when it comes to resources. So I just need to find some stocks that make sense. I put on a watch list. It may take another, before the end of the month, by September, that I laid it down, but you will find that you will see Neo, you will see Lucid on my personal list. And let's see how it goes. Let's see if I was right. China actually stimulates Neo. United States government and some other private industries that's dumping money into Lucid, uh, which used to be a SPAC, is that's the United States government is funding these EVs, and especially some of the parts. It's the new stimulus. At one point, go back into 2000, it was the medical field. Then early 2000 was the electronic field. This is where the computers came out. You probably, if you old enough, you remember Gateway computers. And before Gateway, there's been several. It was Compact. These companies all got put out, and now you just see the operating systems. We still have out there some computer companies that like Linux and stuff that produces it. But overall, most of us look at the software companies in the applications like the Microsofts. We're looking at Apple, the not the computer tower itself, but the actual software that goes on it has stood the test of time, as the computer companies tend to collapse over time. They have a start and a finish, and especially once the government stops stimulating that area, then immediately they couldn't stand. Well, until next, I just kind of give you an example. I'll be back with you guys again on Monday, strictly talking about business. If you haven't seen the show, again, I apologize. My last two videos, the light was a little dim, but going forward, I think I fixed the problem. I think today you can see me clearly, and I hope you can understand me clearly. I'll put more information in the body of it so that you guys have it, and I look forward to seeing you next week. You guys have a blessed rest of your week. Make sure you get your idea generation correctly, and you'll in any stock you deploy your money into, you do your research on. See you later.